stop whatever you are doing right now. If you are a senior, or if you have a parent or grandparent who depends on Social Security or any kind of retirement income, what I am about to share with you in the next few minutes could literally change how much money lands in your bank account. We are talking about an IRS rule change that most Americans over 60 have absolutely no idea is happening, and even Bernie Sanders, yes, Senator Bernie Sanders, has stepped up and said this is not right. This is Senior Pulse US, and today we are pulling back the curtain on something the mainstream media has barely touched. Let me start with a simple question. When was the last time you actually felt financially secure? Not just getting by, not just making the rent or the mortgage work, but genuinely comfortable? Because for millions of American seniors right now, that feeling has been slipping away, quietly, slowly. And now there is a new pressure coming that nobody warned you about. The IRS has been quietly adjusting rules around retirement income taxation and benefit thresholds. And the way these changes are structured, they hit older Americans the hardest. Now, you might be thinking, the IRS changes things all the time. Why is this different? I want you to stay with me, because the details here matter more than the headline. Here is what is happening. For decades, there has been a threshold, a specific income level, below which seniors were protected from paying federal income tax on a large portion of their Social Security benefits. That threshold was supposed to keep up with the reality of rising costs. Groceries are not what they cost in 1983. Prescription drugs are not what they cost in 1995. Healthcare has exploded. And yet, the income thresholds used to calculate how much of your Social Security is taxable have barely moved. This is what experts call bracket creep, and it is not an accident, it has just never been fixed. What does that mean for you in real numbers? If you are a single filer and your combined income, meaning your Social Security plus any pension, part-time work, or investment income, goes above $25,000, up to 50% of your Social Security benefits can be taxed. If it goes above $34,000, that number jumps to 85% of your benefits being taxable. For married couples filing jointly, those thresholds are $32,000 and $44,000. And here is the brutal truth. Those numbers have not been updated since 1993. Inflation has been doing its work for over 30 years, quietly pushing more and more seniors over those lines without them even realizing it. Now layer on top of that the most recent IRS adjustments to standard deductions and retirement account distribution rules, and what you get is a system where an increasing number of retirees who are not wealthy by any stretch of the imagination are suddenly paying taxes they never expected to pay. And this is exactly where Senator Bernie Sanders has entered the conversation. Sanders has been one of the loudest voices in Washington calling this out directly. He has argued publicly that the current structure of Social Security taxation is fundamentally unfair to working-class and middle-class retirees. He has pointed out that a senior living on a fixed income of $35,000 a year is not living in luxury in 2025. That person is managing. That person is choosing between a doctor's visit and a full tank of gas. And yet, under the current rules, that person is handing a portion of their Social Security back to the federal government. Sanders has proposed legislation that would completely eliminate federal income taxes on Social Security benefits for anyone earning under $150,000 a year. That would be life-changing for the vast majority of American seniors. But, and this is important, that proposal has not passed. It is still being debated. It is still being fought over in Washington. And while that fight continues, the current rules remain in place and are actively affecting your money right now. So what does this mean for you practically, sitting at home, watching this video? It means you need to check your numbers. Not next month, not at tax time when it is already too late to plan. Right now. Do you know what your combined income was last year? Do you know if you crossed that $25,000 or $34,000 threshold? Do you know how much of your Social Security was reported as taxable income on your last tax return? If you cannot answer those questions off the top of your head, you are flying blind, and that is exactly the situation that catches seniors off guard. Here is something else that does not get talked about enough. Required minimum distributions from IRAs and 401ks. Once you hit 73, the federal government requires you to start pulling money out of those retirement accounts whether you need it or not. And every dollar you pull out counts as income, which means every dollar you pull out potentially pushes more of your Social Security into taxable territory. It is a domino effect that can quietly cost you hundreds or even thousands of dollars a year. The people designing these rules are not sitting around thinking about the retired school teacher in Ohio, or the former factory worker in Michigan, or the home health aide who spent 40 years paying into the system. These rules were written by people who have never had to choose between their blood pressure medication and their electric bill. This is not about politics. I want to be very clear about that. This is not about left or right, Democrat or Republican. This is about fairness. This is about whether the system that millions of Americans paid into their entire working lives is going to treat them with dignity when they finally need it. And right now, for too many seniors, the honest answer to that question is no. What can you actually do? First, talk to a tax professional who specializes in retirement income, not just a general accountant, someone who understands the specific rules around Social Security taxation and RMDs. Second, if you are still in a position to plan ahead, strategies like Roth conversions done at the right income level can help reduce your future taxable income. Third, write to your representatives. Sanders is not the only voice that needs to be heard on this. Your senators and your House representatives need to hear from you directly that this issue matters. And fourth, and I say this genuinely, share this video. Not for the algorithm, not for the views. Share it because your neighbor might not know this. Your sister might not know this. The person at your church or your senior center or your card game who is quietly stressing about money and has no idea that part of the problem might be a decades-old tax rule that was never updated, they deserve to know. Here at Senior Pulse US, our entire reason for being here is to make sure you have the information you need to protect yourself and your family. The system is complicated on purpose. The language is dense on purpose. But your money is your money. You earned it. You paid into it. And you deserve to know exactly what is happening to it. If this video helped you understand something that you did not know before, hit that like button and subscribe to Senior Pulse US so you never miss a video like this one. We are here every week with information that actually matters to your life. Stay sharp, stay informed, and we will see you in the next one.